Hey traders, hope you all enjoying your weekends. I know it's Friday and I know you guys might have some plans for the weekend, but trust me, when I was learning trading, I was using my weekends for studying the market. When I was becoming a trader, I was not partying on my weekend. I swear I was learning and backtesting all the way through, and I would say there was 10 to 12 hours of backtesting. I was doing that throughout the day, and I still remember my mom used to make fun of me that, Omar, what are you looking at these ECGs on the chart? You know this ECG, the heart ECG you see? That is what my mom used to make fun of me. What the hell are you looking at on the screen? And that is why I want you guys to learn and try to improve your trading if you want to become profitable full-time trader, if you want to make trading as your career. And you have seen the results so far throughout the year, how insane the results are. It is not impossible to become full-time and profitable trader. So this week I want to teach you a strategy that I'm using from last so many years, and I've been trading that from so many years, and that has given me some insane amount of profits. And trust me, this strategy, once the entry happens, it gives you a very good risk to reward ratio. At least I expect 100 pip movement out of this strategy. Now, I know most of you have heard about the volume indicator. So that's why I want to make this video so that you have full rules of how you can enter the trade when the entry happens. When everything in the checklist has been checked, then we're going to enter the trades. So recently I've uploaded a video where I've taught you how to identify valid candlestick patterns and how to trade them correctly. I will highly recommend you guys go and watch that video first so that you know what is a valid 382 candle, what is a valid bullish engulfing candle, because if you know the valid candlestick patterns, only then you can able to understand this video. Otherwise it will make no sense to you. So starting with a strategy I'm going to give you today. So for this strategy we're going to use a volume indicator where we're going to see the volume and the divergence in the price in combination of the volume, and once we see the divergence in both, we are going to take our entries. Now this strategy is the reversal strategy, and once you see the weakening in momentum, it is giving you a signal that price is now going to fall or going to rise from here. For the bullish divergence, it is giving us a warning of the potential change in trend, as you can see right here, and in that scenario price is pushing higher highs. Indicator is indicating us lower highs. For the bullish divergence, price is making lower lows, and indicator is telling us that marking towards the higher lows. So take a screenshot. So when you are learning the strategy, you know that you're looking at the right rules. Now the example I'm going to show you exactly something I've been trading, I've been sending to members, but it is something I use for the exact rules. Nothing is made up just for this video. I've taken the real trades out of that and I've sent those trades to my members. I've sent these zones to the members so that we look at those zones, and once the entry happens on those zones with combination of these factors which I'm going to teach you, only then we are going to enter the trade. So everything is transparent, nothing is made up for this video. I'm going to show you the examples how the trade happens at the zones I send to my members and I've been talking about in my YouTube videos, and we're going to look at some commodities examples as well. So starting with plotting the volume indicator. Now for that, all you need to do, just go on your charts on TradingView. I personally trade on TradingView platform. That is why it is connected with my platform. I trade on IC Markets and on Ovanda. So that is why I use settings according to TradingView. So click on the indicators and just search volume, and here you have a volume indicator right here. You click on it and you will see something like this on your charts. Once you double click on it, just adjust the color accordingly. If you want to make it lighter, make it lighter, and if you want to make it darker, as you can see I have my colors dark so that it's more prominent when I'm looking at the market. EMA must be checked so that we know if the price is above or below the EMA. So we click OK, rest everything it's going to be same. Length should be at 20 moving average should be at 20, and click OK. Now at this point, so these are the settings we need to use for the strategy which I'm going to teach you right now. Now for every strategy we need to have set and stone rules. Objective rules is must. Without objective rules we are just gambling. Now in this type of trading, when we are trading zone to zone, there are some subjectivities, but with subjectivity, we need to have objective rules. Now, why I say it's not really objective, because I mark my zones somewhere here. You might be marking your zones a little bit above, but if you are my student, you know exactly where to mark these zones. And if not, I've already made a video how to mark zones as accurate as possible. It is also linked in my playlist. Feel free to check those videos. Now, rule number 1. Price must hit a level of major resistance. Now, as you can see, it is a major resistance from where the price previously pushed lower dramatically right here, and that has acted as a level of support and resistance. So that is my rule number 1. Price must be pushing towards a level of major resistance. And once the price hit my level of resistance, I want to see a double top patterns. So we're going to use this strategy just with double top and double bottom. For resistance, we're going to use double top pattern. So let's play the market and let me show you how we're going to look at the double top pattern. Now, as you can see, the price just hit the zone and we are still not sure if that's a first top. Right here, we have a first top and now we are getting a pullback. So once we get a first top, our rule is to draw a rejection zone, which is like this from the bodies till the wick. Now, for the second top, I want to see the price to pull back at least few candles, then push down or push up to the rejection box, which is right here, without a candle to close above this wick. If we have that with a body to close above the wick, then the double top pattern will become invalid, and then we're going to look at the trend continuation bullish side. As long as the body closes below and the wick has gone above, that is allowed, but the body close is not allowed. Now, as you can see, the price hit the first top. With that, what we're going to do, we're going to look at the volume down below the indicator we set, and with that, we need to mark the vertical line right at the first top, which is right here. So that is the first top and there is the first high, as you can see right here. Now we want to see if we get a valid double top or not, and rejection without a candle to close above the first top right here. So we have a rejection followed by a 382 candle. Now, like I mentioned at the start of my video, very important to identify the valid 382 bearish engulfers, bullish engulfers, and that is what we have, a valid 382 candle right at the double top area. Now, to check if it's a valid 382 candle, I can tell with experience it is a valid 382 candle with my Fibonacci retracement, which is something like this. Body is way below 382 retracement, so that's a valid double top pattern. It is confirmed that price has now formed a bearish candle. That can either a valid 382 candle or that could be a bearish engulfing candle. If we had either of the condition, we would take it as an entry for. So in this case, we had a valid 382 candle. Now, once we have a 382 candle, we are still not sure if the price is going to push up or not. So the high probability setups, we're going to look at the divergence. So what we're going to do, we're going to mark another vertical line at the second top, right? Now, what are we looking at? The volume of the both vertical lines. The first is a green candle and the second is a red candle. Now, that is itself a divergence, or if you look at the next candle right here, because there are some traders who don't look at the condition. Right when they see the volume, a divergence in the volume, they start selling. But in my case, I look for the valid conditions, and my condition happens right here. Now right here for the bearish trades, if you remember the rule, take a screenshot of it so that you have no confusions. Price must be making higher highs and indicator. In this case, we're going to look at the volume. It's making lower highs, right? So very important, price must be making higher highs and indicator must be making lower highs. So coming back on the chart, so you see the price is making higher highs, and where we're going to look at the objective rules, right here the price push up and made a new high right at the first top. And once the double top is completed, the indicator must be making lower highs. And if you see from the first top, which is right here, this candle, to the second top, which is right here, this candle, indicator is making lower highs. So all the rules are met. Volume is giving us a signal that we have no more momentum left, and it is a possible signal of reversal, and that is how we get a high probability setups for the entries. Now for the entries, what I normally do, I've already made a video for that. Again, check my playlist. Right here at the close, I place my trade. Always keep your stop loss above the wick. You can always go 1.3 to 1 or 1.4 to 1 as well, which is something like this. So that is how we set the trade. And if you look here, easily hit more than 1.4 to 1 target, and you see the divergence right here, a clear divergence, but we already entered, we already got a signal at this 382 candle that price has now an underlying weakness of the momentum of the uptrend. As you can see, this pair was pushing up nicely in an uptrend, and every trend has a reversal. As after how many pips? After almost 300 pips, price hit the zone, forms a double bottom, forms a divergence in the volume, and you see how nicely that hit the take profit. 1.421 was the target, and as you can see, 73 pips target has been hit. And like I said, these type of patterns, I expect a price to push even more further, and as you can see, the price still pushed down 100 pips like I already mentioned at the start of my video. It can even push down to the support level as well. So that is how we look at the bearish divergence. So before I continue the bullish example, I'm going to show you one example that recently happened here on gold. As you can see, just 6th of May, the entry happened on 1 hour time frame. Now if you are someone who followed me from a couple of years, you know the rules of entry of double bottoms, double tops. I normally talk about that in my every single YouTube video. So talking about double top, the rule number 1, price must be at the level of resistance. So this entry must form at the level of resistance for bearish trades. And once the price hit the level of resistance, what we're going to look at a bearish divergence, higher high for the price, and indicator must make lower highs. That gives us a signal of the underlying weakness of the trend, and it's going to likely reverse from here. So it is applicable on all the time frames. The least I have traded that on 1 hour time frame. So for now, we have the price approaching the level of major resistance on 1 hour time frame. This resistance was marked on 4 hour time frame. So that is why we need to look. We're going to trade one time frame below if you are marking your zones on a higher time frame. So in this case, as you can see on 4 hour time frame, this level was acted as a level of resistance, support, resistance, nice support, resistance as well. So that makes it a valid level of resistance. And now going back on 1 hour time frame for the entry. So now all we are looking at a price to hit the zone forms first top. So we're going to play the market, and right here, what do we have? We have the first top. So if you remember the rule, we're going to mark the rejection zone to identify a valid double top pattern, and something like this from the wick to the bodies, and just change the color so that it will be a more prominent. So right here we have a rejection box. All I want to see a pullback to this level without a candle to close above the first top, and this rejection box as well. Wick is allowed to go, but all I want to see a push up followed by 382 candle or bearish engulfing pattern with a divergence in the volume as well. So let's see if we get a pattern here or not. Now we have a hit of the zone, but we have no entry confirmation. Now what do we have? A clear double top pattern. We have first top, and we have a bearish engulfer with a second top. Now let's look at the divergence in the volume as well. So from the first top, which is the high right here, and the divergence and the second top. Now you see something interesting here. The candle is bigger, a very big candle, but here the volume candle is not really bigger. That is a clear signal of a weakening in momentum. And what do we have? We have a double top that happens at the major area of value, and from the first top, which is the high right here, and divergence is making lower highs. Exactly the rules we are looking at, and right here makes it a perfect divergence with double top confirmation. So the way we enter the trade, this is gold trade, that's why I'm very cautious for my targets. I'll just keep my stop loss above the rejection box and take profit. We can go 1.4 to 1 like I mentioned, but for the commodities I normally keep it 1 to 1 initially, because for 1 to 1, as you can see, it is a $10 trade. So let's do 1 to 1 for the commodity, but for forex I normally go 1.4 to 1, but we're going to manage that to 1.4 to 1 as well. Now let's see how it goes, and price pushed down nicely, and if we manage it to 1.4 to 1 risk to reward ratio, which is something like this, and in that scenario the price still takes a while, but it pushed lower, as you can see right here, hitting 1.4 to 1 target. So you see how nicely and insanely it is profitable if you follow the rules right. So as you have seen bearish example of double tops, I'm going to show you a bullish example of double bottom pattern. And now the double bottom in the market cannot be perfect, and that is one example I'm going to show you here. And at the end of the video, I'm going to show you the trade alerts I've sent to the members with the exact timestamp, and so that you can see that I personally use double tops, double bottom patterns at the area of value myself as well. Now right here, as you can see, the price is pushing lower in a downtrend, right? This was the resistance level from where the price started to push lower. Now every trend must bend when it hits a major area of value, in case a demand zone or a support zone. Now what are we looking at? A possible double bottom here with a divergence for the strongest entry. Double bottom itself is a good entry, but if we have a divergence with that, most of the time I use RSI divergence, but this is something I also look at for the extra confidence, which is my volume indicator. As you can see, the price hit my support area. Now at this point, I'll be looking at a possible double bottom trades. Do you see a valid double bottom here? Now, if you remember the rule for the double bottom, once the price hit my zone, I mark my rejection box, something like this, right? So here we did not get any push down from the rejection box, right? So we are not going to take this trade, and this trade is not valid. So what are we looking at? We might get a double bottom still in the zone, which is right here, which I've already marked, and this zone is a level of major support and resistance and a level of significance, and that is a valid level from where we are looking at a possible trade. So what we're going to do, we're going to look at the volume with the double bottom as well. Now let's see if the price comes in my area and forms a condition, and let's play the market and let's see. I want to tell you that trading is a game of patience. Now the patience is to wait till the price hit my area of value. Now as you can see, the price is still inside my area, my zone, and now it is a possible low in this zone right here. So what I'm going to do, I'm going to prepare myself by marking my rejection box. Now let's say we have another push down, another low, then what we're going to do, we're going to remove the rejection box and we're going to keep on looking for double bottoms, because when the market is moving, we are still not sure if it is a first bottom. But as a trader, we need to mark a zone, something like this, and see if we get a rejection from here and then a push up and possible one more rejection. So let's see, boom. So means it is not a bottom yet. Now we are still in the zone and only one candle has closed below in the zone, and we are taking an entry on 1 hour time frame. If you go back on larger time frame, it is still inside the zone. That is why I want to see good momentum for the bearish confirmation. So we have only one candle. What I'm going to do, I'm going to still mark my rejection box right here. Now for this example, I'm going to show you one more entry using double bottom patterns. Like I said, in the real market, it is not very easy to see a perfect double bottom. So as you can see, the price hit my first bottom, and with that, what do we have? We're going to mark the vertical line right here where the first bottom has hit and formed. So now what are we looking at? We are looking at a pullback and possible formation of second bottom. Let's see if we have that. Now we have a pullback. All we want to see a price to hit my zone without a candle to close below this little rejection box. Remember, if the body closes below, the double bottom will become invalid. The wick is allowed to go, but body is not allowed to close. So let's see, what do we have here? Nothing. We have a pin bar that could be a double bottom entry as well. It's going to be aggressive, but that is what we are not looking at. We are looking at just bullish engulfers or 382 candle, which we have that right here. That could be an entry as well, but we are also looking at divergence in the volume for the strongest entry. Now that's looked like a perfect double bottom bullish engulfing pattern. Now I want to give you a refresher of the rules of a bullish double bottom. Now for the bullish divergence in the RSI, price must make lower lows, and RSI or indicator, which is the volume indicator, must make higher lows. And coming back on the charts, price is making lows, right? The diversion must make the higher lows. Do you see a higher low here? It should be like this, and the first bottom is right here and a second bottom is right here. So we want to see the higher low, and that looks like an equal low, right? So that is fine. We can still wait until we get a clear divergence. That is also one of my entry condition, that is aggressive entry. Now, like I said, I want to see a clear divergence to enter my trade, and that is totally fine if we get an entry later. Right here, the aggressive double bottom has happened. Now, we still have no divergence, right? So we are still not sure if the price is going to reverse. Yes, that could be aggressive entry, but we want to be really sure if the price is going to reverse and we have a weakening in momentum. So we're going to play the market, and what do we have at this point? We have a price right here, next candle, that has formed a divergence. Now that is a clear divergence, so we're going to move this line something like this, right? Now what do you see? Smaller candle and a bigger volume candle. So lower lows, and we have a higher low. And if you're confused what lower low is, let's say the market is making a low, we have a low, we have a higher low, we have a lower low, we have a higher low, right? So we have a low, right, and then we have a higher low, right? This is something that can give you a good idea what higher low is. So that is what we have, a higher low at this candle. Now it is absolutely fine if we want to enter the trade at this candle, or it is also absolutely fine if you want to wait for the price to break above this neckline. And let's say we have entered here. Now stop loss can be below this pattern, and we can go 1.4 to 1, that is the risk to reward ratio, something like this. So if we play the market, as you can see, we have a price push. Now you see, if we have entered right here, the risk to reward ratio will hinder, but that is still a divergence in the RSI. So from this candle to this candle, we have a divergence, right? Lower lows, higher lows, makes it a valid divergence. So that is how we entered this trade. And right here, if you see, it takes a while. In trading, nothing is straight. We have to wait, and patience is the key. And as you can see, after a while, the price did push up and hitting our take profit of 1.421 just here on 1 hour time frame. So that is how we trade using the volume with double tops, double bottoms. I've shown you a different condition here, exactly at the double top, exactly at the entry, exactly at the formation of double bottom, completion of double bottom. We did not have a divergence, but we had a next candle. With that, we had a more volume, as you can see, with divergence. That is showing us a signal of reversal. So you see, after this downtrend from quite a while, right here, how the price reversed from here and start to push up from here. And if you see here, the price dramatically push up from here. So that is what we call a power of entering with condition, a strong entry. Like I said, I'm expecting a good 100 pips move from here. As you can see, the price did push up more than 100 pips from here, but I personally use fixed target 1.421. You can go 1.221. This is totally up to you. Back test and see what works best for you. Optimize best performing pair, and then invest your hard-earned money. So that is how we trade volumes with double tops, double bottoms, chart pattern at the major support, major resistance. That is what we need to look at. Trading must be simple without hundreds of lines on your charts, and if you do that, every line will look like support and resistance, and that will do nothing but give you analysis paralysis. But if you just keep your chart simple, one support, one resistance, look for reversals, divergence, trade zone to zone, have a good risk to reward ratio, make money, and that is how we can stay consistently profitable. Yes, we have drawdown period, but that is a part of business. We come out as a profitable trader. Remember, in a long run, you can't be a profitable trader just within the 2 months. You need to give yourself a time, learn the strategies, learn the full system. Only then you become profitable traders. So before I end this video, I just want to show you a trade that I've sent to my members. Right here, Euro AUD. Exact rules I've just shown you. Euro AUD, that trade was happened, as you can see here, on 14th of June just recently. So I'm going to just quickly take you on the charts of Euro AUD on 14th of June. As you can see, the stops and target right here. Right here, this was the trade I've sent to the members with the exact rules, and I've used my RSI for the divergence, but you can also use volume like I just taught you, and that was a winning trade as well. And if you say that, Omar, you have just made up this file, I want to show you the date of when I've sent and created this file so that you have no more doubts left. So I'm going to go to info, and right here you can see that was created on 14th of June, 5:22 a.m. in the morning according to the UK time. So that is what I try to teach you. I personally trade, and that is how we need to be trading. So if you want to learn the trading system which I teach to my MMTA course student, and they are successfully making money with the exact structural program where you have basics, intermediate to advanced lessons, where you will learn all the other strategies which I personally trade with the exact rules of entry and exit, stop loss, exact numbers of stop loss and target, everything you need to become profitable traders. Then MMTA course is something you need to look at moneymarkers.uk. Just scroll down and this is the plan you need. It's just one-time investment on yourself, a lifetime plan. With that you get these two plan free lifetime as well. So one-time investment is totally up to you. If you want to get it, you are going to take your games of trading to the much higher level. If not, that's totally cool. Hit a like button for me so that you get free videos like this every now and then. Hope you trade green. See you guys in the next video. Till then, take care.